Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. Well, last week was pretty good week, I should say. Overall, we have been able to close in the green territory. The candle which has been made on the weekly time frame chart of Nifty spot is decently positive candle, I should say. Only problem what I feel is that it has a bit of the wick on the upside, because there is some sort of resistance probably present over here between 19,900 and 19,927 because due to this big red can. Now, if I look at the daily time frame chart, what I can see is that the trend is up, but there is some sort of selling pressure which is available due to this particular resistance. Now, this entire resistance band coordinates are 19,779 till 19,546. Now, if you remember, probably on 11th of October or either 12th of October, I had clearly told that market has run up way too fast, especially this short-term uptrend, and then it should consolidate it a bit. And then it did dip down, it did pull back again, and after pulling back, I guess the last couple of hours selling yesterday did push the market slightly lower, and we were unable to get a very decent, confident big green candle. Now, once again, if market starts trading above 19,800, 810, there is a decent possibility that we could rally further by 100 to couple of 100 points, maybe 200 points on the upside. Only issue in Nifty right now is that the trend is up, I can understand, but momentum is lacking, and momentum will come only if we stay above 19,800. But along with that, please do not forget that we also have some sort of gap over here. The upper side of the gap has not been filled. Then we also have a gap over here. So I will continue repeating that if you are trading in options, if you're an option buyer, please be careful, because the rallies where a lot of resistance are present, it is very difficult to make money as an option buyer. Makes more sense as an option seller, but always hedge your positions. Fine, let's have a look at the Bank Nifty chart. Bank Nifty, I should say, in the weekly time frame chart, it's looking extremely lackluster. It is consolidating sideways. Nothing much interesting. In fact, this week we have been able to close just below this trend line support. Yes, it is not a proper breakdown, I should say. This is not a proper breakdown. We have closed below the trend line, but there are a few rules for validating a trend line breakdown. I don't think so that is visible over here. And apart from that, if you look the daily time frame chart, the trend is down and we are facing consistent resistance from this particular band. And the coordinates are 44,397 to 44,760, 761. The trend is down, but we need to understand that we need to trade above this 44,760, 44,800. More we stay above this with a big green candle, higher are the chances that Bank Nifty will go higher, upside. And if we start sustaining below this particular candle's low and maybe even this low, which is around 43,600 or something, then higher the chances that markets will continue drifting on the downside. Okay. Now, let's have a look at the PSU banking stocks. Well, when you have a look at the PSU banking stocks, you can clearly see one thing, that last week we had some sort of selling pressure visible. And even this current week, we saw some selling pressure. And it was necessary because there were few of the stocks which had pretty much overstretched. I guess PNB was one of them. It had rallied way too much and it needed correction, some sort of consolidation, which I'd shared in my previous videos. And it's good to see that it has retraced and now it is consolidating. Now, if you have a look at this particular stock, Bank of Baroda, even this stock has retraced, it is consolidating, and now it is visible at a decent amount of support. And this support band's coordinates again are 204 to 201.90, or in round figure you can say 202. So swing traders can possibly keep watch on this particular stock. And there is one more stock which I have noticed is Canara Bank. Canara Bank is also trading at this is not a very strong support, I should say. But yes, although it is still trading at a support, and we should also check the hourly time frame charts. The hourly time frame charts right now looks pretty much lackluster. So again, I would say in an environment where too much ups and downs and too much zigzag is visible, I guess an option seller with a hedged position will be making much more amount of money in a safer way if the stock gives a breakout in the shorter term time frame charts, like the hourly or the 2 hourly charts. Okay. But it needs a breakout. Just because it is available at a support, it doesn't mean that it is a bullish stock right now. But SBI, there is some sort of, you can say resistance which has developed at 609, 610. And this stock was actually ready to move on the upside, but somehow due to some reasons, I don't know what, but the stock is not performing. And it is very, very important. Being the king of the PSU banking stocks, being the heavyweight over here, it needs to participate. It needs to go higher if other stocks will also want to participate on the upside. Private banking pack looks extremely lackluster. You can see the weekly time frame chart, nothing interesting. And price is trading, between the dual moving averages over here. Nothing looks great. Only thing is that it is trading just above the support over here. If you look at the daily time frame charts, what we can see is the private banking pack has been able to make a higher high over here. And this is even a higher low, which is a good sign. But last 2 to 3 candles over here, last 2 to 3 candles are not that great. It is lacking momentum. Once it closes below this particular low, I guess it could create some problems for the private banking pack. And I would surely keep my watch on the heavyweight stocks like HDFC Bank, which is probably going to consolidate for next few days, Kotak Bank and ICICI Bank. Because I believe these are the 3 stocks, these are the 3 banks which could possibly shape up the sectoral charts of the private banking pack. Even you can see after moving up, after closing above this resistance, the ICICI Bank stock is not able to make any bullish candles. So not a very good sign. Let's wait and see what happens in the next week. Energy pack. Now energy pack, it continues to stay bullish, continues to look rock solid. Pretty decent up move in the weekly time frame chart. Retracement, test of the support trend line. Again goes up, again comes down, again it starts rising. So overall it looks solid. Now there are 3 stocks. One is Reliance Industries. All right. Now what has happened in Reliance Industries is this particular candle. This has come on the back of a lot of red candles over here. Now, what I can see is if this pullback continues, and this pullback has probably also come on the back of an important support. See, this is the first support, 2257. Now, if I connect a trend line over here, what we can see over here is this is the first point, right? And 2 points have been connected over here, number 1 and number 2. And this is the level which is 2261 and this is the level 2296. So from 2300 to 2260, I should say there is a decent support for the stock. There is a possibility that this particular stock might rally in the next few days and might try to test around 2380 or maybe even little higher. Now, other 2 stocks are BPCL and one more is HPCL. These 2 stocks have corrected from the higher levels. Just give me a moment. Okay. Seems some sort of issue over here. Anyways, but you can also have a look at HPCL and BPCL. Both these stocks are trying to bounce from this particular base. And there is a possibility that this pullback might continue for the next few days also. Now, metal pack. Metal pack is what I should say is completely lacking momentum. Overall trend is decently positive, not that much, but not bad also. But what is happening is, even though if it is testing a very good support, it lacks momentum. Like couple of days rally, and then again we can say small candles over here. We need such big green candles for this momentum to continue upside. So possibly in the next week only, we will be able to understand what is happening in this particular sector. Autopack. Autopack is looking pretty decent thanks to this particular stock, Maruti. It has performed pretty nicely in the last few days, and it is possible that if it closes above this recent high, then the trend might continue on the upside. One stock which has not participated is Eicher Motors. Now, I have also made a small video on this, or maybe I've shared in my weekly sectoral analysis. That is in an uptrending channel. This is the resistance over here. Once we close above this particular resistance with a big green candle above the coordinates of 35.49 to 35.26, there is a decent chance that there will be some sort of rally on the upside. And this is for positional traders, not swing traders. Well, IT pack was looking very solid, extremely strong, but due to the result season is going on, you can see some sort of volatility happening in stocks like TCS and even in stocks like HCL Tech. It seems that few of the stocks in IT pack might consolidate, and stocks like HCL Tech might continue to go higher. But if you have a look at Infosys, was looking pretty solid and sudden drop. So these type of stocks where the entire smoothness of the chart has been distorted, I think I'll be staying away from these sort of stocks. Yes, IT continues to look strong, but very picky, very picky. You cannot have your hands in all of the stocks in this particular sector as of now. Finance. Finance in the weekly time frame chart continues to look lackluster. It's very much flattish. Even in the daily time frame chart, what you can see is this is the first high, second high is slightly lower. Then we have a low and we have a higher low. So what we need is surpassing this particular high. But in the meantime, there are two stocks which continue to fascinate me. The first one is Bajaj Finance. Possibility that it could consolidate for a few days, but overall trend will remain on the upside. Bajaj Finserv looks solid and pretty decent chances that it could continue going on the upside. There will be a small resistance at 1698. All right. So you just need to be careful over here. Once this particular trend line is taken off on the upside with the weekly closing basis, this rally could continue in the daily time frame chart much higher. FMCG pack recently has tried to bounce back thanks to this particular stock, Hindustan Unilever. But as of now, I do not have my views on the stock. I'm keeping a close eye on ITC. ITC is still consolidating, and probably the day it closes above 460, 465, there'll be some sort of an upside momentum on the upside. And if it closes below 430, then there'll be some downside momentum. All right. Consumption pack. Now, in the consumption pack chart, you can see that weekly time frame chart, rate rally, retracement, again a bounce back, and again a retracement. Again, it's trying to go up. Even in the daily time frame chart, it's looking all right. It's not looking that great, but it's looking pretty okay. Now, there is one stock which I have been keeping my eyes on, is Apollo Tyres. This particular stock has corrected over here, and this is a big red candle. If you check this particular candle and try to compare to all of these candles recently, you will not find a bigger candle than this. But despite this sort of selling, what we can see is the selling slowed down over here. After slowing down, we could see a base and the prices are going up. Why? The reason for that is this huge trend line, which is holding on since almost a year, not a year, but you can say 11 months. So positional traders should surely keep watch on this particular stock, Apollo Tyres. Infra looks pretty impressive in the daily time frame chart. In the weekly time frame chart, yes, it is pretty much overstretched. But I had recently made a video, my previous video, where I shared 3 stocks. Ambuja Cement, right? This is the first stock which I had shared. The second one was JK Cement. And the third one is Ultratech Cement. All these 3 stocks, I guess positional traders should keep a watch on them. And I have given the valid reasons for why this particular stocks should break out on the upside. The first level for Ultratech Cement breakout is 85.30. If you check JK Cement, it needs to possibly trade above 33.50, 33.55 to, see a decent momentum on the upside. And if you check Ambuja Cement, then it needs to close at least above this high of 453.60. So in round figure, you can say 455 or slightly bit more than that. Once that happens, you will be able to see a decent momentum on the upside. But all these closes should happen with proper big green candles. Pharma Pack, I guess, looks pretty much overstretched in the weekly time frame chart. In the daily time frame chart, what we can see is it is consolidating, and it is extremely rigid that after rallying so much, the prices are not even ready to test this level. If we see a couple of candles closing below this particular 23.6% Fibonacci retracement, we could see some more correction happening on the downside. Realty Pack looks solid in the daily time frame chart. In the weekly also, it is looking great. I guess, especially this stock DLF looks pretty good. But now what has happened is it has been hitting the resistance zone. You can see this candle over here. Number 2 and number 3 all are showing signs of slightly overstretched on the upside. So if there is a retracement in this particular stock, DLF, and if it consolidates, I guess swing traders should keep a watch on it. PSU banking chart, again, it keeps hovering around this particular resistance zone, which is a 261.80% Fibonacci extension in the weekly time frame charts. Not interested in this particular sector as of now, not at all. I'll wait and watch and probably wait for levels which are much more favorable as a long side trader in terms of the risk reward ratio. Mid caps continue to remain rigid, just like pharma. In fact, more than pharma, because in pharma we could see the prices were, moving somewhere over here. But in this particular sector, the prices are way far from this 23.6% Fibonacci retracement. I guess it needs some sort of correction, consolidation, and only then it will become decently good for a long side trader in terms of risk reward ratio. So just to sum it up all, I guess the trend is still up in Nifty in the overall markets, but the momentum is lacking. The momentum is surely missing, and probably some of the sector, any one sector or any couple of the sectors will have to take the lead if you want to see Nifty higher. There was one sector which was IT, but sadly due to the result season, some sort of volatility is visible. So now we'll have to wait and watch and understand which other sector is ready to take that leadership. Without any leadership, it will not be easy for markets to climb higher. All right. Trade less and trade wisely. Thank you.